Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at the stock market, the Magnificent Seven stocks, as well as other charts and indicators. And starting off with fear and greed, as you can see, we are deep into fear with the stock market, borderline extreme fear. So possible opportunities are out there. And when we look at pie vesting as well, you can see we are down into high fear as well. Looking at some other important charts that I think are good to keep in the back of your mind moving forward is that we have been through this phenomena where we have this presidential pump, not really a Santa Claus rally. And so is an inauguration dump already being somewhat priced in. So this is typical in new presidencies. This is just the average for the S&P from elections, as you can see from the 30s till the last election. But around the time of the inauguration, it is somewhat normal to go sideways and to have a little bit of a correction. As you can see here, looking to the right, when we look at the peak and the bottom of where this is, we might be seeing somewhat of a 5% or so correction in the start of the year. At least that's been the average before. Something else to consider is that overall, as far as what years on average the markets do the best, you can see it's in the third and the fourth year, but the first into the second year tends to be not so great. And I'll show you some other charts that back this up that might be telling us or showing us that there could be some possible downside in the future. So we want to be careful and value minded when we are looking at which stocks to buy. You've also probably heard that the Fed has been cutting rates and they might only have a couple more rate cuts because they are worried about inflation coming back. And so we have been in this non recessionary rate cut environment. But what's important to note is that when the Fed is cutting low and slow, the market tends to still be positive for a while. But when they're cutting large and fast, that's when you have to be concerned. So even though the Fed recently, they started with a 50% rate cut in September. They didn't meet or cut in October, and they've just been averaging 25 basis point cuts. So that's okay for the near future. But something else to keep in the back of your mind is that stocks are at record levels of how expensive they are as far as their price to earnings ratio. So do be value minded. We'll take a look at different indicators, at least ones that I use that I believe help find better value in the stock market. Of course, I know a lot of you are here for crypto. And what does the stock market mean for crypto? And I believe that there's some weird ads I tell you. I believe that what the stock market is doing, if it is starting to or going to have a big correction, that typically does impact what crypto is doing. So crypto a little bit detached from what the stock market's doing right now. And as you can see, still high up into greed. Subscribe though if you want to hear more about my crypto analysis. We take a look at the cyclical nature of Bitcoin through the rainbow chart, talk about Bitcoin miners, altcoins, do live streams. I like to share technical analysis of different altcoins available on Robinhood and Coinbase. So subscribe if you want to hear more about that. All right, let's get into the S&P 500, if you will. And I wanted to throw on a couple indicators. We have the stochastic RSI and the MACD. That's the moving average convergence divergence. And I just want to take you through what we see going on here. And as far as the stochastic RSI, when it is getting oversold, if you will, let's just go into the past and see where it has been and where it has gone to. So last time we had a little bit of a dip when the stochastic RSI was getting oversold. That was about where the dip ended up. Same with the time before. However, there are these times where you can get these double bounces and we can get a little bit more of a dip. But typically, when we've seen, at least on the stochastic RSI, getting down in these oversold areas, pretty much always, except for this time, it was done bottoming or near bottoming. As far as the moving average convergence divergence, when it starts to flip negative, which it just did recently, you can see how in the past here it's still had a little bit more to go. So the moving average convergence divergence, or MACD, might be saying, you know what, maybe there's just a little bit more of a correction coming. And something you can always do to try to hedge your risk is wait for confirmation, wait for it to be going over to the upside. You can wait for buy signals. You don't have to time the exact bottom. So I try to take a look at charts for anything I buy. This is me now. None of this financial advice, but when it's flipping positive or when we get buy signals, you're not going to get the very bottom and you're not going to get the very top. But I take a look at it as if it were a profit sandwich, and I don't need to eat all the bread. I'm fine eating 60 to 80% in the middle, and it's just a good way to hedge risk. And these are two good indicators to use together for different stocks. But let's throw on the moving averages and see that so far, since this little bull run since last year, October, as far as the S&P, when it does correct, it has been liking and bouncing off of this 20-week moving average. If we zoom in on the daily, you can see that sometimes it gets down to the 100 or just taps off of there. It's getting close to there again, got underneath to the 200. So just if you're thinking about the averages since last year, as far as the worst it's done, here in August when there was the whole yen carry trade unwind and Bitcoin fell by 30%, it only got down close to the 200-day moving average. So just keep that in perspective. We might have some decent value times right now as far as looking at certain stocks. As far as the volatility index, you can see it's ticking up and it is above those daily moving averages, creating them into support. One chart I always like to look at is the percent of stocks above the 200-day moving average. I think this one shows pretty good leading indicators of what might be to come. So when we take a look at this on the weekly, we will notice that when we get around this 50% level, these last few times, like September 24, here of course was August, this is just last year, June and April, that was around the time or close to it when we started to see a bounce or things starting to turn back up. So I think as the stochastic RSI showed us, it's not quite done finishing bottoming yet, but we might be closer to that than we think. Of course, there's this trend line here that if we were to break down further and get even more bearish and get another 10% or so correction, we'd be looking for this trend line and a bounce off that. But as far as right now, it is still on the 200-week moving average. No, starting to move a little bit underneath it. We do have that horizontal trend line support. As I was talking about the signals for a possible bearish 2026, one of those signals that's been pretty strong in the past is the US 10-year minus 2-year. And when we put our chart out this way and it goes negative, that's what's called a yield curve inversion. When the Fed is raising rates, we get inverted. When they start cutting rates, this is a very simplistic way of saying this. When they start cutting rates, we get uninverted. There's way more to it than that, but for the sake of these videos, not going to get deep into the woods on it. But what you will see is after the uninversion, this was 2019 to 2020, that there was the bottom of the market right there with the COVID recession. And here was the 2008, the great financial crisis and the dot-com bubble. You can see that the bottoms of the market were about, and we're just going to try to get this somewhat close to exact, 560 days, and here was about 660 days. Of course, you will see that those inversions weren't as long or as deep as this time around. So a thought that's been playing out in the back of my head is, because the inversion was longer, is the uninversion going to take longer? Is it going to be a longer amount of time until the bottom of the market? But if we just take some of those numbers we saw before, there was 660, give or take. That would put us right smack dab in the middle of 2026. The other one was high 500s, and that would be earlier 2026. So again, I think that kind of goes along with this chart that there's some macro indicators showing us that 2026 may be a rough time in the markets. Another chart you can take a look at is, let's actually go over to here, as we'll look at inflation. And something that's not happened really since the 70s is that the stock market, when inflation is a problem, when it is peaking, this tends to be pretty close to the stock market bottoms. So there's a lot of talk of people being worried about another spike of inflation coming, as we had here in the 70s to early 80s. So if another spike of inflation is coming, that might be something to be prepared for. But as far as the time between these spikes, I'm just curious about that. That was about 1900 days. Not that it has to be exact this time around, but if we did have to wait 1900 days, that would put us out a while. Am I doing this right? As I'm drawing the data over to the right, I'm like, something about this doesn't feel right. Okay, yeah, it says 1900 days, 63 bars. Cool. Sometimes when you're doing it, maybe it's not the scale. That's what's going on. That's what is tricking my brain. So would it be in October of 2027 if we had something similar here? Again, try to be flexible. Have a strategy or a plan that makes you money regardless of what the market is doing, because we can throw up these these data points of what happened prior times in history. And history doesn't repeat; it does rhyme. I'm sure you've heard that 100 times before. But it's important to have a plan of what you will do regardless of what the market's doing, whether we get another spike of inflation or not. But if we are to see more spikes in inflation, these white vertical lines, by the way, this is where those three spikes of inflation were in the 70s. The red lines, that's when the Fed was first cutting rates after holding. But just focus on the white lines. Those inflation spikes, look how close they were to the bottom. So if inflation is to be a problem again, then that might be close to where the next market bottom is. And if so, remember, it's not that stocks are being worth more because of that. You can see how the market went on this giant tear, but it's that our dollars are worth a lot less. And so if our dollars are worth less, that's going to organically pump the markets. Not that it's worth more, but again, our dollars are worth less. Since 2020, our dollars are already worth 20% less. So if we do get another spike of inflation, that might be a really good time, at least compared to the 70s, to look for good value in the markets before our devalued dollars get priced in and the stock market rips further. Unemployment, that data is going to be coming out soon. And as you can see, it's at 4.2% right now. I remember last month when unemployment was coming out, they were saying, well, if it's 4.3, that's going to be horrible. And everyone panicked. But it went to 4.2 and people said, okay, that's all right. So I'm curious, is that narrative going to carry over another month? If unemployment does tick up to 4.3, it could be a catalyst for the markets to possibly go lower. So you can see, as I showed you on the S&P 500 with the moving averages and the stochastic RSI, remember how we had this little blip here where it rolled down further? Let's say unemployment does come out bad, we might see another tiny little correction like we did here. And that was a 10% correction. That wasn't a tiny one. Sorry about that. Yeah, that was about a 10% correction. So it's been a while since one of those big corrections. Might another 10%er be around the corner? We'll see. I'll do a video on some altcoins available on Coinbase and Robinhood later today, but you can see crypto. We'll just show you some Bitcoin real quick. Still in this little bit of a downtrend, and usually when we start getting these weekly red candles, it can be about 2 to 5 weeks on average. So if Bitcoin starts to settle in around this price over the next week or so, then maybe we are putting in a bottom over there as well. All right, let's get into the Magnificent Seven stocks. First, we're going to start off with NVIDIA, and let's throw on our buy sell signals here. So we have some lower highs coming in. Let's actually take a look at the daily. We have some lower highs coming in. Did have a nice bounce here off the 100-day moving average. But as you can see, the 50-day is having trouble holding on. So it is possible that NVIDIA could come back down to this 236 level as well as the 100-day moving average. And if the markets were to get really bearish really soon, then The next area of support, I think there's a lot of good support here, horizontally, price action wise, as well as the moving average and the fib. We have the 382 and the 200-day moving average here at 117. So if you're looking for deeper value on Nvidia, that 117 area would be an area to watch for. But if you were only waiting for $130 Nvidia here, I think wouldn't be the worst time to get some. That would be possibly in my opinion, the beginning of decent value for dollar cost averaging. You can see it didn't want to stay there long, so there are buyers. But if the market did turn pretty negative, then it could get down further. Excuse me. Going over to Microsoft. What do we got for Microsoft? So Microsoft, I drew my fib a little differently here. Was looking more at the macro. So drew high to low, took it off log, and what do you notice? There's all this price action bouncing off of the 1618 fib. And if you're curious what the fib retracement is based off, it's basically the golden ratio that's everywhere in the world, whether through rivers or veins, capillaries. The golden ratio, it's even in the stock market, and that's why you'll see those Fibonacci retracement golden ratio numbers be honored so much on the charts. So right now, Microsoft fell through the 1618, and it does have this lower high, but it is getting support off the 200-day moving average. So possible, really good time, the dollar cost average here with Microsoft. I'd say one of the best, if not the best, stock out there. So if you're just looking to chip away at a great stock like Microsoft, I don't think you'd want to totally miss this level right here. But we do have higher lows, we do have lower highs, so you can't argue that there's a wedge being formed out here. We'll just draw that out real quick just from connecting the highs and the lows. So if Microsoft continues to bounce around in this wedge, it is curious as it tightens up. That's around April 2025. What's going to happen by April 2025? Is it going to rip lower or rip higher? And you guys saw the charts for 2026. So might Microsoft just start to settle in here before recessionary times and it starts to go further down? So I'll just show you this for Microsoft. But when there is a bear market, you're looking at these top stocks to get under their 50-week moving average. And you can see it bounce really nicely off the 200. But Microsoft, these top stocks, as far as how often they're under or at those weekly moving averages, you can see in here, after the dot-com bubble, you had about a decade to really dollar cost average in Microsoft. You would have had a 20x from whatever you DCA'd there. But since then, you can see it's just been on a tear. And last time in 2021, when it had that correction, you'd see that it went down about 40-ish percent, 30 to 40%. So when you see some of the top stocks in the world getting down 30, 40, 50, 60% and getting underneath the 50-week moving average to these other moving averages, and they can go lower, it can hit monthly moving averages. So that would be really great value time to be getting in on some of those stocks. And I'll just say this, if you are buying Microsoft here, you love Microsoft, and you're telling yourself, you know what, I love this level. If you love it here, you need to be ecstatic about the discounts that you can get at these lower levels. So that's the mindset of a market psychologist. Don't be dumb money, retail money, who only buys in when things are good, when there's greed and FOMO. You want to buy in and pay attention when the markets aren't doing so great either. So next, let's go over to Apple and see where Apple's at right now. With Microsoft and Nvidia correcting a little bit, I can see why there's fear in the market. There's a lot of low breath, and the Mag 7, Mag 8 stocks pretty much take up around half of the total stock market, it feels like right now. Apple, so right now it treated the 1618 as support, and I'm wondering if Apple has the juice to get up to the 2618 at around 278. That would be my price target for Apple. Going over to the daily, you can see that it's getting down near the 50-day moving average. And when it's been getting a little oversold, the 100-day moving average, which is at around 231, let's just say 233, by the time it might get there, could be a good, decent area to dollar cost average in on Apple. Amazon, what do we got here on Amazon? This is another high to low fib that I drew. Let's extend that out a little bit. So we're covering the whole chart. Here we go. And so right now, it's still above its former all time highs. Might get a bounce somewhere around this 50 or 100. But Amazon looks like it wants to get up to that 1618 at 255. So after this correction is finished, this 50-day moving average, you can see with the price action here, the 100-day, there's some price action back here in July. After one of those areas, I could see a good bounce up for Amazon. That 100-day level, that's around 202, 50-day around 213, 214. As far as Google, wasn't quite able to take that 1618. If we go to the weekly, probably just shows a wick. And there you go. I talk about this in Bitcoin. Any of you watch my crypto videos, that whenever price does get above the 1618, I want to see where the weekly closes. And I do use Heikin-Ashi candles. That way we can see more of the trend. But this does concern me with Google. I want to see when it comes down here and hits these weekly moving averages and this former wedge, is that going to be a catalyst for a bounce to finally get it above the 1618, or is it going to lose that support? Because if Google wants to go to the 2618, you can see that's all the way up there at around 260. So just something to keep in the back of your mind there. And as far as Meta goes, Meta constantly looking like one of the strongest stocks, keeps bouncing off these 20-week moving averages, does have that weekly sell signal. The weekly moving average, as well as the 1618, is right there at 569. But Meta, if the market were to get stupid bullish again sometime soon, you can see that 2618 is all the way up there at 866, which is just crazy to think about. Let's go to Tesla, and I'm going to do a bonus stock for y'all today. Tesla, and I'm going to look at Palantir as well, because a lot of people have been loving talking about Palantir. So Tesla, something to consider with Tesla is that, and you can see that's a pretty decent weekly sell signal, though it's being bought up here right at the top of the channel. It broke out before. We'll see if Tesla gets back in that channel and what it looks like. But something to note, and it's, again, when we zoom out, you can see, okay, was that just a wick? So on the monthly, technically, Tesla's still in that channel. I digress. Something to think about with Tesla, after it has these big moves up where it's bullish for about 10, 12 weeks straight, you can see it does have some decent size corrections. So in the past, when it's had these big moves up, it can correct a little bit. So let's get rid of this fib. I'm just curious about this. You can see after this big move up, Tesla corrected all the way back to that former level. Okay, and it ripped down further. After this big move up, I'm curious what that shows on the fib retracement. It got down, had a 0.5 retracement. Sometimes you can just look at these charts and you're looking for patterns and seeing what does this stock like to do. After that decent move up, you see Tesla had a 786 retracement, eventually rolled down all the way. Let's measure this move. This is just me thinking out loud here. As far as from the bottom to the top, had a 786 correction. Yeah, it wicked a little bit underneath. So if Tesla is to have a similar style correction, and we'll go bottom to top, if it gets to the 0.5 or 786, talking about Tesla coming back down 272 to 350 range. So usually, at least in the past, when Tesla has ripped up, I would not be touching it right now. All my biases aside, for an automotive company being worth $1.2 trillion, I would see if it gets down to that 786 area around these moving averages in that channel, or the 0.5 to the 786. Lastly, let's take a look at Palantir, PLTR. Doing a bonus stock for y'all today. And this one, a lot of people loving Palantir. And this one has been one of the best stocks last year. So when a stock moves up from its last bottom, 1,200, 1,300% in the span of, you guys can see that, in the span of about 2 years, you want to be extremely cautious. It's not typical. And as far as good values for Palantir, you can see how detached from reality it is right now. It looks more like a crypto or an altcoin. But something I look for is where could you find the deep values and what can you expect as far as how much higher this can go. One of the bullish things that I can consider is that its market cap at 167 billion. That tells me that there's still decent amount of room for this to run, but I'm not buying Palantir right here. I am going to be patient and wait to see if any of those corrections to the moving averages on the more macro scales are to come. But if not, that's okay. You don't have to try to catch these at the very top when all the FOMO's in the market. But if you are in Palantir and you're looking at extra levels for it to hit in the near future, and Palantir has been ripping, the next level at 2618 is at around $108. So that's the area to watch for. One of the essential questions I try to answer in all my videos is, excuse me, is now a good time to buy? And right now, even though it has a little bit of a correction, I would say no, I'm not quite touching it. But if you absolutely had to get your hands in Palantir, maybe you can wait for it to come down to one of those 20-week moving averages. Or you can see here after it goes sideways for a bit, it does like the 100-day moving average at its deepest value. But you can see even on the daily, it's not even touching the 50-day moving average. So this thing's just going parabolic, and any chart or stock crypto that goes parabolic straight up like this, it does tend to crash pretty hard too. So I'm going to be patient and wait until I buy more Palantir after it has a decent sized correction. Anyways, let me know what you think in the comments below. I'll do a video a little bit later on different cryptos, altcoins available on Coinbase and Robinhood. Do some TA on those charts. But thank you all so much for watching and have a great day.